Well, the man who runs the JSE Limited, that means the man in charge of the Johannesburg Stock Exchange, Russell Loubser, is with us in the studio. Russell, these are very strong financial results. Just to go through the kind of the bottom line numbers, your revenues were up 22%, but you managed to increase your profit margins, and as a result, headline earnings per share 50% higher in this time. Maybe we can start on the revenues first. How is it in a difficult time, as we're hearing, for financial services, and particularly for shared trading, that you're able to push your volumes higher?
Okay, number one, we're coming off a low base, and that must never be forgotten on the equities market, which is different to the derivatives market. Derivatives market, we're coming off a high base. What I mean by that is liquidity, or like some people prefer to call it velocity, which is turnover divided by market cap. We're running now at about between 50 and 60% in South Africa. We've done fantastically well. We've come from 5%. But 50 to 60% liquidity is nothing compared to some of the exchanges which are at 150%, 200%, some of them 300% comparable number.
Coming from 5%, there's a huge jump. Is that due to technology and the investments you made there?
For sure. There's no question that technology was one of the main things that allowed us to clean up our act, and which lured investors back into the market where they felt they were getting a good deal.
Have you got the platform now to take it up to 200-300% like other markets?
Oh yeah, for sure. In the December closeout, we did 128,000 transactions. Nowadays, we're doing around about 70,000 transactions. On this identical platform, the London Stock Exchange did 1 million transactions, over 1 million transactions in one day.
What would take it higher? Where's your boost going to come from?
Look, realistically, we're a small economy. We can't expect to do the same type of thing as the London Stock Exchange. So I don't see anything wrong in being small, but I do see something wrong in being useless and lazy. So can we reach the same types of numbers as other comparable exchanges? Yes, I think we can. In other words, I think we can go, our liquidity numbers can grow to more than 100% over a period of time. Now, I don't want that, preferably, I don't want that to happen overnight, because then it shows something's wrong, something's overheating. This thing must grow gradually and sustainably over a period of time, so that we don't have these troughs and peaks like you have when something either rises too fast or falls too fast.
That's good news on that side. So you do have scope for expanding as
far
as that's concerned. Have you got scope to expand these profit margins? Because at an operating level, before taking all your financing, and you get a nice boost there as well, you're looking at a 36% profit margin, which is the envy of many companies.
We do, because that's we have disadvantage and advantage. Our disadvantage is it's a fixed cost business. So if nobody trades, well, then we've just got overheads and we've got no income. But that isn't the situation. And if that is the situation, then you've got an entire financial market industry that is without work. So that's the disadvantage. The advantage is that when you've breached that critical level, then everything above that is profit. You don't have to add any more people. You don't have to add any more systems. You can just bank it.
Don't you scratch your head and say, well, if we were to reduce costs, perhaps we would be able to grow those volumes more rapidly? How do you approach that dilemma?
Yeah, but I don't think you can save yourself rich, Alec. Obviously, we watch costs. If you've got a fixed cost,
I mean the cost of trading.
Oh, the cost of trading. That is one way. The way I prefer to look at it is rather let's add more functionality. Let's add a better service, because it's very important when you engage in this type of discussion to say, okay, what are the JSE's costs as a percentage of the total cost of a trade? And when you do that little exercise, then you'll see that the JSE's take out of the total cost of a trade is around about 10%. So now you must ask yourself, do you want to concentrate on reducing the 90% or reducing the 10%? If you reduce the 10% by half, you've saved the client 5%. Different story if you reduce the 90% by half.
Yeah, at 10%, there isn't really a whole lot of advantage to be able to do it that way. You are sitting on a very juicy dividend yield, 5%, as we discussed a little earlier. Is it the kind of number that people can bank? We've had many companies worrying about being able to pay dividends in the year ahead, cutting back on their dividends. We saw it again from SAS. We saw Anglo American completely getting rid of its dividend last year, or last year's dividend. How does the JSE sit?
It's conservative. We've got a conservative dividend policy. Remember, we gave ourselves a range just to give ourselves some flexibility of between 1.5 and 2.5 times cover. Now, we could have afforded a 2 times cover this time. We decided, despite the fact that we can afford it, to rather be a little bit conservative, to go for 2.5 times cover. But because the profits are better, the total dividend is better. Last year the dividend was 130 cents. This year it's 192 cents. So can they bank it? Geez, Alec, I'm scared of saying that because nothing is sacrosanct anymore. But, you know, we don't have any debt to start off with. We don't have any leverage. And I've mentioned this to you before. So there's no doubt as to the value of our assets, like in some financial institutions overseas. In the beginning, when I needed money, nobody wanted to lend to us. And now everybody wants to lend to me, but I don't want it. I'm happy with a slightly lazy balance sheet because you know the BISA deal is on the table, and we're not presupposing the outcome of that regulatory approval.
But it does seem, it's a regulatory approval.
It's regulatory approval. Yeah, the shareholders have voted. 91% of the shareholders have voted in favour of the deal. 100% of those present at the scheme meeting voted in favour of the deal. So that gives you one indication.
Is that your major booster potentially for profit into the
not in the short term. BISA has to be turned around. The real work starts when we get the approval, and hopefully we will get the approval, because then we have to go to all the issuers and investors and find out what they want. And we have to fix that market. That market works. My contention is that it can work much better.
This is the bond exchange.
This is the bond exchange, exactly. And that's 240 million. You know, it's also now well known that we are talking to the Mauritian Stock Exchange. We have been talking to them for a while to take a strategic stake in that. Please don't ask me what percentage, how much money it's going to cost, but that's going to require cash.
Russell, your BEE transaction, do you have any charges
That's now
against
complete.
it? Mm-hmm.
That's now complete. We've completed both the black shareholder retention scheme as well as the shares that we issued to that trust. You know, the dividends of which educate black youngsters.
David?
That's all done.
It all looks good. There's nothing there to really put a hole in.
On the JSE? No, the whole thing is it's volume driven, and the volumes are not coming down besides derivatives. So if there is a slight setback, it's not going to be too severe.
So
I would bank the dividend.
You